The transfer cannot be processed. That is what the teller told him. 9 years in Thailand. A 6.5 million baht condo sale sitting in his account, and he is standing at the Bangkok bank counter in Chiang Mai watching his afternoon disappear. Not because the transfer was illegal, not because the amount was too large, because he walked in without one document. This video exists so that never happens to you. Here is the single most important thing to understand before anything else. Thailand has no hard upper limit on how much money a foreigner can wire out of the country. None. You could walk into Bangkok Bank tomorrow and transfer 50 million baht to a UK account, and it would be completely legal. The government is not trying to trap your money inside Thailand. What it is doing is tracking it, and the tracking system has teeth. Let's put a number on what is actually at risk here. If you are wiring out the proceeds of a condo sale, 6.5 million baht, and you cannot document that the original purchase funds came from abroad, your bank has the legal authority to withhold 15% before the wire leaves Thailand. On 6.5 million baht, that is 975,000 baht. Gone. Not a penalty, not a fine. A tax deduction applied silently at the point of transfer, with no warning and no negotiation at the counter. And it gets more specific than that. The withholding tax rate is not determined by the size of your transfer. It is determined entirely by the nature of the money. Repatriation of foreign capital you originally brought into Thailand, 0 withholding. Dividends from a Thai company, 10%. Interest, royalties, service fees paid to you from a Thai source, 15%. The bank does not guess. It asks you to prove it. If you cannot prove it, it defaults to the rate that protects the Revenue Department, not you. So the question is never, can I send this money out? The question is always, can I prove what this money is? Thailand's foreign exchange framework runs under the Exchange Control Act, last meaningfully updated in 2019. Under this system, the 5 major commercial banks, Bangkok Bank, K-Bank, SCB, Krung Thai, TMB Thanachart, operate as what the Bank of Thailand calls authorized dealers. They can approve standard outbound transfers without direct, case-by-case Bank of Thailand pre-approval, provided the documentation is clean. The number that changes everything is $50,000. That is the trigger point. Above $50,000 equivalent in a single transaction, 2 things happen automatically. 1. Your bank files a currency transaction report with the Bank of Thailand. 2. You are required to complete what is called the Foreign Exchange Transaction Form, known formally as the FET form, or in Thai, TOR 3. Write that down, TOR 3. You will need it. Below $50,000, the process is simpler, though individual banks can and sometimes do request documentation at lower thresholds. Some branches flag transfers above $20,000. Never assume your specific branch will follow the minimum rules. Separate from the bot reporting system entirely sits AMLO, the Anti-Money Laundering Office. AMLO requires all financial institutions to report any single transaction of 2 million baht or more. That is approximately $55,000 at mid-2025 rates. This is a completely separate obligation from the FET form. A large outbound wire can simultaneously trigger both the bot currency transaction report and an AMLO filing. These are not redundant. They go to different government bodies. Your bank handles both. You just need to supply the paperwork that makes both filings clean. One more piece of context worth having. Thailand's foreign exchange reserves hit $282 billion in 2025, up 19% since 2022. The country runs a current account surplus. The Bank of Thailand has zero systemic incentive to restrict capital outflows. The obstacles you face are purely procedural. Every single one of them is surmountable. So what does the paperwork actually look like? Here is the complete list for a large outbound wire, above $50,000 equivalent. First, the FET form, THOR 3. Your bank will give you this form at the counter, but you should know it exists before you arrive, not discover it in the queue. It requires you to declare the purpose of the transfer and certify the source of funds. Second, proof of fund origin. This is the document that stops most transfers cold. For a condo sale, that means the sale and purchase agreement, evidence that the original purchase funds came from abroad, specifically a foreign exchange transaction certificate, showing you imported that money into Thailand in the first place, and bank statements showing the proceeds hitting your Thai account. For salary or investment income, it means payslips, company accounts, or brokerage statements. Whatever your source, document the chain completely. This is where most expats discover the problem too late. When you originally brought money into Thailand, your receiving bank was supposed to issue you a foreign exchange transaction certificate, or FET receipt, for amounts above $50,000. If you never asked for it, it may not exist. And without it, proving that the money you are now trying to wire out was originally foreign capital and therefore subject to zero withholding becomes exponentially harder. The lesson there is obvious. Request the FET receipt every time you remit into Thailand, even if you do not need it today. Third, depending on how long you have been in Thailand and your tax residency status, your bank may request a Revenue Department tax clearance certificate before releasing a very large transfer. This is more common on transfers above the equivalent of $300,000 and more likely if you have been a Thai tax resident, meaning you have spent more than 180 days in Thailand in a given calendar year. That 180-day rule matters here. If you are a tax resident, the Revenue Department has a theoretical claim on your income, and your bank knows that. A tax clearance certificate is simply proof that you do not have an outstanding Thai tax liability before the money leaves. Implication. Here is what the expats who never have a problem at the counter actually do. They do not treat international transfers as something you figure out when the time comes. They build the paper trail in advance, because the paper trail proves the story your bank needs to hear. If you are selling a condo, request the original FET receipt from when you purchased it. It lives in your bank's records, and you can usually obtain a copy. Pair it with the sale and purchase agreement and a clear bank statement showing the sale proceeds. That 3-document pack answers every question the authorized dealer compliance officer will ask. If you are wiring out salary or freelance income that has already been taxed in Thailand, or that qualifies under a double tax agreement, your documentation pack looks different. You will want pay documentation or contracts, proof of tax withholding or filing, and a clear statement linking the source income to the funds you are now remitting. The practical advice: do not do this at a branch counter on a Tuesday afternoon. Book an appointment with the International Transfers or Trade Finance desk at your bank. Bring the full document pack. For amounts above $200,000 equivalent, ask your bank in advance whether they require additional Bank of Thailand pre-clearance. Because while most transfers up to that level are processed at the AD level, very large transfers can involve a different internal approval workflow, depending on the institution. And if you are wiring out funds from a Thai company, a dividend to yourself as a foreign shareholder, for example, the 10% withholding tax is usually handled by the company before the transfer reaches your personal account. Make sure the withholding tax certificate from the Revenue Department accompanies the wire documentation. Without it, the receiving bank in your home country may have questions too. Takeaway. The one thing to carry out of this video: Thailand's rules on outbound transfers are a documentation system, not a capital control system. The money can always leave. What determines whether it leaves cleanly and at the right withholding rate is whether you can prove the story of where that money came from. Request your FET receipt every time you import funds. Keep your sale and purchase agreements. Know the Tor 3 form by name before you walk into the bank. And if your transfer is above $50,000, call your bank's international desk in advance. 12 days in limbo, the way that story started, is entirely avoidable. For the complete document checklist, the full withholding tax rate table, and the step-by-step guide to requesting your original FET receipt from your Thai bank, subscribe to the Bangkok Brief newsletter at thebangkokbrief.com or subscribe to this channel so you don't miss what's next.